Homebuilder sentiment pulling back in August as elevated mortgage rates, weak buyer traffic, ongoing supply-side challenges all weighing on the market. This comes as Warren Buffett's Berkshire Hathaway increased its exposure to the sector last week. It did add shares of Lennar. It initiated a stake as well in DR Horton. Wedbush analyst Jay McCanless joins us now. He's got his outlook for the sector. We also got some sentiment numbers at the top of the hour, Jay. Despite what was a fall in mortgage rates, things don't seem to be getting much better. What's your take?
Well, thanks for having me on. I think the one good data point you can apply the confidence numbers is that the traffic sub-index actually showed an increase from July to August. That's the first increase we've seen in a while. And if that's a sign of better things to come, I think that's one of the big things the builders had needed this year is more traffic coming out to the neighborhood. So any incremental help we can get for the group right now, we'll take it.
Yeah, you surprised that with mortgage rates slipping to the lowest level of the year that we haven't seen more of an impact in terms of the stocks?
Yeah, I think so. And, what's worked, I think, this year is that the move-up buyer, the luxury buyer, they're still very willing to come out. But it's been for more the entry level, the DR Hortons of the world and Meritage. They've had a tough time of it. They've had to buy down mortgage rates, find other incentives, find ways to get traffic in the neighborhood. I think if we can see the headline mortgage rate come down, it's sitting at 6.5 now. If we can see that move to the low sixes, high fives, that would certainly get people back in the neighborhoods.
Yeah, but to your point, those discretionary buyers, so to speak, I mean, they're going to be on the sidelines for the foreseeable future, in your opinion?
Hard to say, but you have to think so until, the other thing that's been an issue this year is not only the headline affordability, but I think consumer confidence has been softer this year than it has been in years previous. And I think this is really the first time since the GFC where buyer confidence and consumer confidence has been such a headwind. If we can get any help on that front, I think, and the builders have all called this out in the recent earnings calls, if we can get a change on that front, that's going to help in addition to any help we get on rates.
Do you think Berkshire disclosing its kind of mystery stocks that it acquired in the first quarter as being Lennar and DR Horton helps that sentiment shift in any way? Does it signal anything to investors about the potential opportunity with this group of stocks?
Yeah, we don't cover Berkshire, but certainly keep a close eye on it because they, in addition to those buys, they already owned the largest manufactured housing company in the country. They own a top 15 stick builder. They own USG. So Berkshire as an entity is, I think, very bullish on housing long term. So, yeah, them making the acquisitions of Horton and Lennar, I think is just another signal that Buffett and his organization believe that there's a lot of promise ahead for housing. Depending on which stat you want to believe, we're somewhere between 2 million and 5 million homes underbuilt in the U.S. And so I think Warren Buffett and Berkshire are trying to take advantage of that still large need that's out there.
If you want to try and find a home, you do often go to Zillow. I note that I think you have that rated to buy. The stock has had a very strong year, up somewhat, almost 57%. Why does it continue to be something you think is worth buying?
So I think a couple things. The software that Zillow sells to different realtors and realtor boards, et cetera, I think that's still a quiet part of the story that people aren't paying attention to. I think that's why Zillow has been able to grow faster than the underlying real estate market for roughly last 5 quarters. I think the other thing is if you look at where resales are now nationally, we're running about 3.9 million homes this year versus a normal, quote unquote, 5.5 million, call it 5.5 to 6 million. So at some point, I think that will begin to turn. And I think that's people have been looking at this name in anticipation of that, but also the realization that an increasing number of software tools that Zillow's offering are the reason that potentially we think they're going to continue outgrowing the market.
Yeah, I mean those numbers you just cited, those are staggering in terms of where we typically are and where we've been for a while. I guess Chad, just end by asking, when we have this conversation all the time, when do we get back to normal?
I think the lock-in effect is still very real. The confidence thing has been a different wrinkle this year. So I think if we can get help on one of those fronts, either confidence gets better, mortgage rates get back to a high 5, either one of those, I think, could help us start that return to normal.
Yeah, a lot of pent-up demand. There have been a lot of stories about it as well, people just being stuck. Jay, thank you. Appreciate it.